Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, which is probably going to be the most important video that we've done for the last 12 months, I'm going to be going through exactly what I'm proposing to do now that we have met our first target, which we've had since the beginning of this year, which is exactly at the RSI MTF line, as well as the 61.8, which is exactly at the 61.8, which is the 12-month target we've had since we bottomed out here and accumulated our entry positions for our long-term portfolio. So the big question is, having met this target, is it time to sell? This is what I'm going to be looking at for all of the video today. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we start, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions and any swing trade decisions. Okay, so these are the two targets that I've been setting for the last 12 months. The first one at this yellow line, the RSI MTF line, which we hit last night, so this is before the markets are going to open later on today. And the second target, which is now just above the 78.6 level here, and this is a pi cycle at 54,500 currently. The reason for our pi cycle, if you've been watching my videos, you will know that I've been looking at this because historically, in every single cycle, before we get to the halving, we always hit this red line. And the question is, are we going to hit it this time round? Well, only time will tell, but we'll be guided by that narrative. But in the process of hitting this pi cycle, in the previous cycles, it's also hit this RSI MTF line before it gets to the pi cycle. And this is exactly what we've done so far. And the question is, do we take profits here for an expected pullback, or do we ride it until we get to the pi cycle? As always, you know my position, and that is that I have to always remain fluid and flexible and let the market guide us. Normally, I would have taken profits here. We have the added complication of a future Bitcoin bullish event, which is the decision to approve the ETFs. And this is now propping up the Bitcoin price. This is very different from what's happened in the past. So this is what's driving the price higher. And the question is, so what do we do? The question is to take profits for a potential pullback and miss the next move to the pi cycle, or do we hold for the 54,000 and risk a pullback of 10% here before we do that? What we have to do is to look at the driving forces and play the balance of probabilities card to come to a decision here. The honest answer is that no one really knows what's going to happen. I don't want to pretend that I know anything here. All I know is that these are the two targets we set based on a historical perspective and a historical narrative of what's happened in the past as a guide to what may happen in the future. So we've come now to the first target. And one thing I can tell you from my side is that I am actually very afraid. I am afraid of a quick 10% pullback down here. Maybe 10, maybe 20%, you don't know. But in this powerful trend that we've got here, and I'm going to explain this in a second, this is an incredibly powerful trend that's powering ahead. My other emotion is that I can't really afford to lose my positions. And the truth is that no one really knows where Bitcoin's going to go from here. This is what I'm going to explain now before I come to a conclusion at the end here. Firstly, I'm going to have a look at the wider markets to give you the backdrop of exactly what's happening in the wider markets to give us a good balanced view. This is the dollar on the daily chart. We've really called this all along here for a downturn. And currently, we've seen these counter trend rallies along the way, and we've just had another one, and we're now getting rejected there as well. So the thrust of the direction for the dollar here is to the downside. And this is the next support line here, around about 101. So what this is telling us is that the markets are in a risk-on mode at the moment. Similarly, the 10-year bonds are also on the slide exactly like the dollar, and you would expect that anyway. So the thrust of the direction is once again for the 10-year bonds to be to the downside. Again, creating the conditions for a risk-on environment. This is the HYG, the junk bond market. And this is always very interesting because it looks, for all intents and purposes, that it's now bottomed out with a nice consolidation over here. And we're really going to the upside. And these junk bonds, as I mentioned many times before, are very, very sensitive to the economic climate in the background. They are a very good gauge as to where the markets are going, because these are the ones that are first to pick up the signs for a big improvement and they're also the first when the markets are about to come back down. So they give you a very good leading indicator in terms of which direction the markets are going, and currently they're going in the upward direction. So once again, giving us a risk-on environment in the foreseeable future. This is the S&P index, and I've been showing you over the last many weeks now since we bottomed out here. When this actually fell down, a lot of people were calling for a bear market here. And as I mentioned at that time, that this isn't really not confirmed, and it would be very easy for the market to bounce back up to the red line, this support line here, and then to do exactly this. And this is exactly what it's done over the last 4 or 5 weeks. We've come up to the resistance points, which is exactly what we were expecting. And the question is here, do we have a slight pullback? And remember, this is now the first, second, third, and now the fourth attempt to get above here. And what we've really created, if you look at it, an inverse head and shoulders pattern. So you've really got two heads really in here. So you've got an extended head, a small shoulder on the left-hand side, a small shoulder on the right-hand side, and you have an opportunity to break up here. So this could quite easily break here, but there is also a possibility of a pullback before we break up. But the main thing to consider is that we've had a very nice big bullish move up, just like Bitcoin. Finally, a look at the Dow Jones, and what we've done here, very similar to the SPY. This is the zone that we were coming up to in terms of the neckline. And with the Dow Jones, it's actually leading the way to the upside here by breaking the neckline. So once again, we came up 2, 3, 4 times now. So on the fourth go, we've actually broken up and we formed this inverse head and shoulders pattern, or you can call it a cup and handle pattern here. And it's come up here to the neckline and it's now breaking up. So once again, creating a risk-on environment as we see it currently. So this now brings us to the Bitcoin price. The first thing I want to mention here is that what we have is a rising demand. This is just creating higher lows all along down here, and it's making higher highs on the upside. And we've currently just broken out from that trend. And I just want to mention that there are so many frustrated people here, because when it came to this point and we saw these candlestick pattern developing here, and we were expecting a move back to the downside, down to these levels at around 32,000, and that would have been very sensible because that would be retesting the previous resistance points. This is exactly why it's very dangerous to second guess the market at certain points, and this point was not a point to actually second guess the market for this pullback, because what's happened is that at this point, when people were expecting a pullback, the market went above and just kept going, as you can see with this rising demand. And Bitcoin just didn't give it to them. And the issue we've got here is that with the advent of a bullish future event called the ETF approvals that we're all waiting for, there are enough people buying in at just a slight pullback. Every time we've had a pullback, look at these red candles. Every candle, there is a push up to the upside. Every time we've had a little pullback, it goes up. This one here, look, it goes up. This one. Every single one, a big rise. So every minor pullback has actually been bought up very, very quickly, creating the higher highs and the higher lows. And I would suggest that's mostly to do with the potential ETF approvals that we're waiting for. And the thing is that, as I mentioned in the last many videos, the supply of Bitcoin has been falling while the demand has been rising. And that's created this rising demand over here. The psychology here is that people want to be in the market when the approval for the ETF comes along, which at the moment we can't really say with 100% certainty that it's going to materialize, but everybody's expecting 90, 95, 99%, whatever, that it is going to materialize. And with that thought in mind, nobody wants to let go of their Bitcoin, because we know that before that decision occurs in the middle of January, whichever way it goes, people are willing to hold on for that big event and the anticipated rise in the Bitcoin price. So the question really is, what do you do at this point, having met this target of this RSI MTF line? We've met this now, and this is our first target. What do you do here? With this added complication of the ETFs in the future, and that's in the next 5 weeks, the Bitcoin price is looking more and more likely that it will be more in the late 40s in the approach to the ETF approvals in mid-January, rather than in the low 30s or even higher 30s. On balance, it doesn't seem to make sense to hope for a 10% dip when Bitcoin could easily go 20-25% higher within a month. And the reason why I say that is that even though we've got the 61.8 level, this is the white box here, This is a 61.8. So there is reason to take profits. And also with the confluence of the RSI MTF, the issue that I've got here is that people tried to take profits at this point. It looked really sensible to take profits here with a pullback to the 32,000. So people already tried to take profits with the idea to buy back on a pullback, but the market didn't give it to them. And those people have been desperate for a pullback to allow them to get in, but the market just keeps giving higher lows around here and it just won't let them get back in. And unfortunately, this is one of those times when it is virtually impossible to predict in the short term, especially when Bitcoin is in a powerful bull market mindset here. And what it wants to do is go higher and ignore all the indicators, even the RSIs, the stochastic RSIs, all the other oscillators. These become completely useless when Bitcoin is in this mindset. One of the other things I was looking at to see how powerful this move is by Bitcoin, and that is that we needed to have a look at the 8 EMA on the weekly chart. Because what this does is it gives us a clue as to what happens when we break out of the 8 EMA. We have a very high probability to come and retest it multiple times along the way. So you can see whenever we break up, we come back and retest it. And then there's usually a fall back down. And then once we get above it again, we come back and retest it. But in the last 8 weeks, since we broke up here, you can see that the price is quite a way away from the 8 EMA. This tells you the extent of the actual strength of this bull run that we've just had with Bitcoin. And currently we're actually going above the 61.8. So this is a little bit of a clue that we may not stop at the 61.8, but go on our way to the 78.6. And that is where the pi cycle is. So we have to take that balance of probabilities into account as well here. So what I would be looking for to see when this trend comes to an end is for some sort of a lower high. At the moment, you can see that it keeps making a higher high along the way. We had a little bit of a rest here. We've made another higher high, another higher high. We don't know whether next week we're going to make another higher high and then another one. So not knowing this makes it very difficult to take profits at this point because there's no real signal apart from the obvious 61.8 here. And even on a daily chart, we are finding support on the 8 EMA. And again, we're making higher highs along the way. So there's no sign at the moment that this is now going to top out at the 61.8. So we have to take that into a consideration. So we may well have thought at this point that this is a good point to take profits, but like we have to remain neutral and fluid and flexible and let the market guide our decisions. When it's come to this point here, there are no signs at the moment that we can say that with any degree of good probability that this is going to come back down yet. So we have to wait for at least 1 day's candle to see whether there's any lower highs to give us some sort of a clue of a pullback. And a pullback we should get, because when you look at the CME futures market, our old friend, the CME futures gap, has now formed from the Friday's close to the Monday's open. So this gap is now down at 39,640. And as we know with the gaps, there is a very, very high probability, not 100% certainty, but with a very high degree of probability, maybe 90, 95%, this will come back and retest the top at 39,640. So whether it's going to be from here or from here or from there, certainly there's a high probability to retest that level and fill this gap. Okay, so what's the conclusion here? The current price, as I'm doing this video, is at 41,500. And I can only tell you what I'm doing, and that is that on balance, like I said before, I am afraid that there is going to be a 10% pullback at this point. But on the other side, I'm looking at it that this is a very powerful bullish trend that I can't afford to lose my positions. And I don't hold Bitcoins, as I've said many times. I hold the Bitcoin miners, so there's an added complication there. And I will be updating the private members section a little bit later on today, exactly what my position is before the markets open. And the truth is that no one really knows where Bitcoin goes from here. But on balance, all things considered, and having accumulated the Bitcoin miners at these points here, we were lucky enough to get the bottoms through the various indicators I showed you over a year ago. So having got in at this bottom point, and then along this way through the swing trades in the private member section, I've accumulated in the long-term portfolio and added to them over this period of time. So I'm now in a position where I'm actually afraid to lose any of those positions just for a 10% pullback at this point. I'm even more afraid of losing those accumulated positions that if we don't get this 10% pullback, that the market will leave me behind, and then I'm going to have to make up this big gap and lose some of the hard work along this journey here. And please remember, this is not financial advice. I can only tell you what I'm doing. So I'm just going to sit tight and wait for the price to tell me what it wants to do. And at the moment, and I don't see at the moment any candlestick patterns that are developing to tell me which way the market wants to go. And in that situation, it is better for me anyway to sit tight and just remain calm, not panic, not lose your positions and your allocations, and let the momentum of the market take you higher if that's where it wants to go. Even if you have to suffer a short-term 10% pullback here. And in my experience, the majority of the money is made during trends like this. This is where the money is made. And the trends are usually your friend because they continue most of the time. And you really want to take advantage of that and not get shaken out by short-term moves. It looks obvious that we're going to have a pullback, but sometimes with Bitcoin, it's not as obvious as it seems. So on a balance of probabilities, it looks like Bitcoin wants to move much higher. And it seems to me to be unnecessary to take a risk of this happening in the hope of a 10% pullback, and then you end up losing a 20, 30, 40% move to the upside. So there you have it. That's my position. Everybody has their own unique financial situation which they're in. But if you're like me, you have a 2-year view for the end of the bull market at the end of 2025, and you're happy to ride all this along here. For people who have that type of a situation, on balance, this is what I'm doing, and everybody has to make up their own minds. But I'm certainly going to now sit tight, because there is no sign of any pullback here. And if you are interested in the Bitcoin miners, all the spaces were actually taken last week, and some of you weren't able to join because all the spaces were taken. So what I've done is I've actually opened up another 25 spaces. So those of you who weren't able to get in and join the member section, then you've now got an opportunity to do so. And like I said many times, we're on a 2-year journey with the Bitcoin miners, and we're currently at an incredibly good position because we've had a big pullback, but we're now recovering very fast. So the Bitcoin miners is in a really good position to really take off for the next 2 years. So I wanted to open up that opportunity to more people. All you have to do is just click the join button, and for the price of a coffee per week, you can have access to all the long-term positions that I'm playing, as well as the swing trades and the usual technical analysis for the Bitcoin miners, and come on board on this 2-year journey with us. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if there's any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.